fighting inflation. Inflation has just pretty much come about from nowhere. We had been fighting deflation, so when prices were going down, 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 trying to bring them to a steady level so that people knew about stability. And then as a result of very speedy recovery, plus the energy crisis, caused by Mr. Putin, who's decided in an unjustifiable way to invade.
Today, I think, is we are on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new one, the new accounting, is what we call blockchain.
Essentially, central banks can program money so we all have different monetary policy or different tax regimes or whatever it may be. The point being is behavioral economics is going to shoehorn its way in to monetary and fiscal policy, which are combining. And at that point, we are really beholden to what central banks do. Can they destroy money? Can they destroy our capital, our savings? Of course they can. And we needed a life raft. And Bitcoin was going to be it. Now, as we wind forward, we're now seeing pretty much every government on earth running record deficits. This means that theoretically they're all bankrupt. But we know in this modern world of printing of money, bankruptcy in governments doesn't mean the same thing unless you can't print money. Hence why emerging markets go bankrupt, developed markets don't. So the answers to these record deficits is all the story of debt, really, right? How do you finance that debt? Well, you finance it in the age-old way. Taxation, inflation, and debasement. Well, they're a bubble. I don't think you even know what NFTs are if you think it's a bubble. What they are is a way of authenticating assets digitally. That is something the world needs, because all of this internet of value that's being built across Bitcoin, Ethereum, and all the other protocols and elsewhere is all about trust. So when you put something on an NFT, you're creating trust. And trust creates scarcity. And scarcity creates value.
But, you know, we'll probably come on to it, but derivatives, that is what is going to make this system collapse. I'm absolutely convinced. Now, you know, as I just said, what has happened is that the whole credit system has turned into a derivative market now, because this is such a convenient form for banks, central banks, and everybody to just issue money without actually having to go by their balance sheets. So, you know, I've been saying that the official derivatives, a bit over 10 years ago, the global derivatives was about 1.3 trillion, a quadrillion, 1.3 quadrillion. And then conveniently overnight, the Bank of International Settlement in Basel that regulates these things, they decided that they would halve it and say, well, the risk is actually half of what it is. But that was absolutely nonsense. So officially now they're reporting 600 trillion. But in my view, the figure is not just the 1.3 quadrillion that it was. A few years ago, you know, credit has increased dramatically through derivatives. And as I said, you know, all instruments that's being issued now of banks, of pension funds, of any stock fund, etc., is all synthetic. There's no real underlying papers in anything almost. And therefore, my estimate that the derivatives would be at least 2 quadrillion today, and I think that's probably conservative. And then, as you said, then we have debt on top of that of 300 trillion, and then we have a few, about a couple of hundred billion at least of trillion, a couple of hundred trillion of the unfunded liabilities. So we're talking about at least 2.5 quadrillion here, you know, and that's with a global GDP of 80 trillion. So there is a disaster waiting to happen, and especially since all of this printed money has actually created no value whatsoever. It is only air, and it's air in the valuation of stocks and bonds and credit markets and property, etc. And that's, you know, I've been absolutely convinced for the last 20 years that this would collapse. It's taken a bit longer than even I expected, but I think we are at the end of a major era. What I'm saying is these derivatives at some point in coming few years, will actually turn into debt, because central banks will have to cover all the outstanding liabilities of the commercial banks, as we're seeing now with Credit Suisse, we're seeing with Bank of England, etc. And I think that's going to happen across the board. So whether it's called derivatives or whether it's called debt, as far as I'm concerned, it's the same thing, and it will have the same effect on the world financial system, which will be disastrous, of course.
What ends is that money becomes worthless, basically.
Well, it will do, because what will happen is that the debt I was talking about, and whether that debt in the end will be a couple of quadrillion or more or slightly less, it's irrelevant. When that debt implodes, which I'm absolutely convinced it will, because it's only printed money, it's not real money. It's done is to inflate the asset side of the balance sheet. So stocks, bonds, and property and other assets have gone up as in a major bubble, and when the debt implodes, and I'm absolutely convinced it will do, because nobody can repay it, and nobody today, they can't even pay interest, and of course sovereign states are not going to be able to pay interest on these increasing debt and increasing interest rates. So therefore, when the debt implodes, so will the assets that were financed by this debt. So both sides of the balance sheet have to come down. Well, remember, there is only one medicine that central banks use, and that's more printed money. There is nothing else they can do, and that has failed. And now you're getting negative return on printed money. So that's not going to save anything, in my view. So therefore, we're now looking at a situation when sadly this system will start to implode. We might see, I think we will actually see, I think interest rates will continue up, because central banks now, the ECB, inflation in the EU was up now to 10.7%. US is slightly less, but I'm sure it's more than they're showing, because we speak to ordinary people. Everybody's paying 10, 20, 25% or more for all they need, which is energy, food, rent, etc., mortgage rates. So therefore, inflation is much higher. And since central banks are always wrong, are always behind the curve, now they are going to continue to destroy these financial markets. It doesn't matter what they do, as a matter of fact, because they are going to self-destruct anyway, these markets. But they will, central banks will exacerbate it, and they will, I'm convinced, and this is what the ECB has said also, they will continue to increase interest rates. And they're now working together, the ECB and the Fed. So they will increase interest rates in tandem. And I think what they're going to do, I mean, the QT or quantitative tightening, I mean, that's hardly happening at all. And that's going to now reverse, in my view, where there will be, to compensate for the interest rates which nobody can pay or afford, central banks will have to print much more money. So I think money printing will go up dramatically again in the coming years.